Hello nephews, it's your Uncle Charters here, and it's a Saturday, but I'm gonna be doing a little bit of analysis for yesterday on Friday for the intraday, and gonna recap the week and what the plan is for next week. Okay, so first we're gonna look at the flow sentiment. I'm not very knowledgeable on the best option flow, guys. I'm just doing this because I had a lot of viewers ask me to show this data, so I do it for y'all. And it's overall bearish. Okay, I have filtered only for 500K though. Okay, there's a reason for that because I want to talk about how these put contracts, these big put contracts, 10.5 million in premium, 8.2, 3.3 million premium. They all 395 strikes and an expiration date in July 15th. Okay, so it's a big money betting to the downside at the end of the day. All right, very sneaky how they entered at the very end of the day. Okay, and we're gonna talk more a little bit about that, how it aligns with the PA, the price action. Okay, but next, this is my Discord where I try to do my best to keep my members on the right side of the trade. I give my plans, my notes, my commentary, my ideas. Okay, so basically yesterday I had a bull case scenario and bear case scenario like every day. And the bull case scenario is what I was trading yesterday, okay, based on the price action. And I put here, I will look for calls if 4-7 resistance is cleared. I will either buy the breakout or use the back test and go tactic, depending on what the price is doing, okay? Now, when I wrote this around 7:24 a.m., all right? So if you look on the 15-minute chart, you'll see here around 8, the price started jumping up. This pink line right here is my 4-7 level. So pretty much my plan was to buy calls, which we can only do in trading hours if 4-7 clears. Now this makes it a little tricky because in pre-market it's breaking through, is breaking above that level. So do you just buy calls at the open? It gets a little tricky, okay? So I had to update it around 9:14 a.m. because a member asked about it. It was a very great question, okay, and very important. We're clear about the plan before market opens, okay? So I had to update the group. And pretty much the strategy and tactic is always the same no matter where the SPY opens, okay? Pretty much you just, wherever it opens, you have to identify where the first support level is and where the first resistance level is. And pretty much if it clears a resistance, we can either look to buy the breakout or use the back test and go strategy. And we'll look for puts if the support level fails, okay? Which in this case, around that time in pre-market, the first support would have been at 407 with the next resistance at 408.5. So the plan was to buy the breakout of 408.5. And as you can see here, I was able to do it successfully, and many of my members I think was able to do it successfully. Okay, buy the breakout of 408.5, and I had price targets. I wrote it. I think I later updated. I had a 410 price. Okay, I wrote it here 410, 412 to 415 short squeeze target were my price targets, and well, after we broke out, we crushed the 410 price target, broke out of that. You could have bought the breakout of that. And the yellow line right there is the 412 where it based a little bit, cleared it, treated it as a support, based a little more. We lost it on the 130 candle. It closed 8 cents below 412, but the very next candle, it cleared it and recaptured it, okay? And then at the 2 o'clock candle, it treated it as a support before taking off, okay? So that's a false breakdown. False breakdowns are very, bullish. Gave us the back test and go and just went up. Hit my I had a 413.5 target as well. And then eventually my short squeeze target at 415, okay? It worked very well. Only did one trade from 48.5. Then I started scaling out around 410 and into the 412 level. Made it a little over 2,500. And then I left a small runner because I usually don't try to chase home runs. I just go for base swings. But I leave a small runner where I'm able to hold through pain because it's just, it's a very tiny position and doesn't hurt me much. But I leave a small runner in case the market does want to give me a home run, which it did later in the day. Okay, very good trade, worked out very well. Okay, so here's the daily chart. Okay, we're going to get into technical analysis of SPY, and you can see the orange line, my multi-year trend line is served as both a resistance level and a support level, okay? You can see the bull flag, the yellow bull flag. I had a viewer say that doesn't look like a bull flag, so let me know what you guys think. I have a bunch of touches up here January 4th, January 5th high touch there. Connects to the March 29th to March, I think that's March 31st, March 30th high. Okay, so we had a few touches for the resistant line of the bull flag. And as far as the support line of the bull flag, we start here around the low of August 3rd. Got some touches here around September, low of September 20th, low of October 4th, and low of October 1st. Had some washes below, some false breakdowns right here. Remember, false breakdowns are bullish. And it actually did serve pretty well if you played the false breakdown, but also another touch on May 24th, which was recent. Okay, so that looks like a bull flag to me, but let me know what you guys think. All right. So we talked about, all week, last week possibly as well. I talked about I will not be bullish on SPY unless we can recapture that multi-year trend line. And very glad and I'm very grateful to see that it aged very well, because after we recaptured that multi-year trend line around 396.5 to 397 zone, we got the squeeze all the way up to 415-ish. That's about $18 around there. That's a big move to the upside. Okay, should have made some good money on it in theory, but you never know. All right, so as of right now, I'm still short-term bullish on it. Okay, I'm not fully bullish. I'm still overall bearish because it's still in correction mode. I maybe turn fully bullish if we can actually break out of this bull flag. Okay, maybe have to get above 450 for me to be bullish on it. Of course, I'm a level to level day trader. I'm gonna play it level to level. All right, I have this level at 415. And then the next one is the Fibonacci level at 418.5. Okay, these Fibonacci levels work very well. Okay, if I zoom back out, I have them set up from the March 2020 low to the January 2022 high, and we had a near perfect bounce off that 38.2 retracement level around the 380 to 381 zone. Okay, it's also possible that since we got a bounce off of that Fibonacci level, we could just simply be back testing the next Fibonacci level, the 23.6 retracement level, which is at 418.5. Okay, we broke down this level back on May 5th. Okay, you see right here on this red candle, we broke below on May 5th. We never got a proper back test as resistant. Okay, so that 418.5 level, watch that very carefully. It could be a point for the bears to step up and push this down for the next leg lower. Okay, of course, if we can clear 418.5, that's a sign that we can head up a little higher. All right, I would have another price target around the 428 to 430 level, with 425 and 420 in between that. Okay, so watch that 418.5 level. We get a strong rejection or a bearish engulfing candle, that's your sign to get bearish. Okay, catch the wave down while it's on the way down. All right, and of course, if we don't hit that level and start taking out these other support levels that I have, 415, I got some at 412, 410, and a critical one, which was a previous high. I was watching that 48.5. This was a previous high back on May 17th. That's how I was watching it. Okay, if we break back below that, that will be a false breakout. False breakouts are bearish. If we lose that 48.5, that's a good level to get bearish and look for puts. Okay, I have a level around 4.3 to 4.4. On Thursday's video, I said to stay bullish as long as that level holds. It worked out well, but to look for bearishness or bearish positions if that level failed. Okay, and I'm sticking with that again. If we see that fail, that could send us back down to 397, back to the multi-year trend line, where I'll favor new lows if that level fails. Okay, because we still got to watch. We can get a bounce from any of these support levels. We just never know. All right, so we always want to be nimble, because the market can do anything and is willing to do anything to trick us retail traders. So we got to be nimble and just let the price action guide us. That means know your support and resistant levels and watch the reaction there. If it breaks out of a resistant, that's bullish. If it rejects from a resistant and the support fails, it takes out the next support level, that's bearish. You know, you got to... The way I trade, I don't take trades unless it meets my criteria. Okay? So definitely remember the levels that I mentioned. Watch out for those levels, especially that 418.5, 415 level. Okay, 415 fails, we could go back down 413.5 to 412. All right, you just play it level to level. All right, take profits on the first level, leave a small runner. I just, that's what I recommend. Don't try to chase the home runs, okay? Now, before I end my analysis on the SPY, and before we get too bullish on the SPY, I want to take a look at this chart right here. This is the SPY as well, but we're going back in time here. This candle right here, this starts in October of 2007. Okay, when we were much younger, our glory days, right? And you can see here from October 2007, we had a nice bear trend over here that lasted until March of 2009. Okay, this is a daily chart. Now you look within this bear trend that we can see in hindsight, it's a bear trend. Within this bear trend, there were a lot of bounces. Okay, bounces that led for that lasted 2 weeks to a month. Like look at this bounce on November 27, 2007. We didn't get a top until December 10th before we started getting the next trend down. Okay, this bottom right here on January 22nd, we didn't get the next top until, a couple weeks later on February 1st. Are you guys catching my drift here? All right. So sometimes the relief rallies, they can last a couple of weeks, maybe even a month, a couple months, maybe two, before the next leg down. Okay, so that's why I'm talking about our charts now. That before we get too bullish, remember we can have relief rallies and short squeezes that can last. All right, but that can last for weeks to months, but it'll still be overall a bear trend, a bear market, or correction. Okay, just something to think about and keep in mind. All right, for me to be more bullish, like I said, I would want to see a breakout of this bull flag, which would need SPY to get above 450. Until that happens, I'm still going to play it level to level, but my overall sentiment would be bearish. That means I'm going to be a lot more careful with calls and longs and bullish positions, and just take profits at the next level, play it level to level, low risk. Okay, and take a look at the VIX here. I had the triangle pattern. VIX is starting to break down. Okay, we see it breaking down. Okay, so the VIX, if the VIX recaptures it, it needs to get above 26. That's pretty bullish. If it recaptures it, it puts 27.5, then 29.7, and another test of the resistance level of the triangle pattern, 31.7 in play. So watch for the recapture, because then it will be a false breakdown. That will be bullish, and a bullish VIX would be bearish for the SPY. So got to watch out. But since we do got a breakdown, we want to honor it as a bearish move, and we're going to need to see some follow through on Tuesday. So that means we need the VIX to stay below 26 and continue. The next support is on 25.4. So if it continues to stay below 26 and breaks 25.4, that's very bearish. All right, and that's showing follow through. All right, guys. QQQ had the breakout of this downtrend line. This downtrend line that lasted since early April. We got the breakout. Breakouts are bullish, guys. Okay, so I got first support around 306.5. As long as that level holds, that keeps higher price targets in play, with the next critical one at 315. All right, 315. I got some levels though around 309.6, 312.7, but the critical one's at 315. If we can clear that, that puts 325.9 back in play. That's my next Fibonacci level. For me to be bearish, it has to take out some support, starting with 301.6, and if it drops below 298.9, that will equate to a false breakout of this trend line. Okay, that's when I would turn bearish, when the price action starts turning bearish. Dow Jones also had a breakout a couple days ago, and it showed follow through since then. So in this relief rally, Dow Jones has been leading the way, and it recently just cleared the 330.3 resistant level. Okay, so that's now support, and as long as it holds, it keeps 337.6 in play. That's the next big critical level. If 330.3 fails, that's a false breakout. Good time to turn bearish, and it puts 325.5, then 321.2ish back in play. All right, IWM also had a breakout of this trend line that lasted since November of 2021. Okay, break out of that and cleared the 185 level. I had a resistant level there, so that will put 190.5 and the 50 DMA around 192 in play, then 195.6. For me to be bearish, got to fail support. 185.4, and then probably break back down this trend line. So it has to break below 183. Below 183 is a false breakout, very bearish. And look at that. Apple recaptured this blue trend line that served as support for quite some time. We recaptured it. Recaptures are bullish, guys. That's a false breakdown. False breakdowns are a very powerful setup. So the next big critical level is 152.5. That's this test of this blue trend line, the resistance of it. If we break above that, that's a breakout. Okay, so Apple doesn't have a breakout, but it does have a recapture showing us a false breakdown. That's very bullish setup there. Okay, for me to be bearish, I have support at 148.4. So for bears, if you guys want to step up on Apple, they need to take out that level first, putting 146.6 in play. Then the support of this blue trend line at 145.4. If that fails, that's a false recapture. Very bearish. Okay. Tesla, I've been saying, after it recaptured that I had a critical level around 644-ish. All right, I don't have it now for some reason, but I had a critical level around 644-ish, and it started recapturing some levels. I had a level around 682, then that 701 level that I talked about, and above that I had a 745.5-ish level. You can see Tesla cleared all those levels. Okay, so 745.5 is now support, and that keeps 765 in play. Do not look for puts unless a support level gets taken out. Okay, one of the worst time to look for to try and short is after it broke out, when the price action is just very bullish. Okay, so 765 is the next resistance. If we can clear that, that puts 790 in play. Then 822, excuse me. All right, possibly get back above 800. We'll see. Okay, so watch that support at 745.5. If that's lost, that puts 701 back in play. 682, 644, possibly down to 620. That was the previous low there. Okay, guys, so let the price action guide you. I hope you guys found some value in this video. I hope you guys had a great trading week this week. All right, looking at the analysis, worked out very well this week, and I hope it worked out well for you guys. So thank you guys for watching. Talk to you all soon.